Hello, Jim here. I'm starting a new series today, and it's about finding stocks that could potentially turn you into a millionaire. Now, the first stock I'm going to talk about today, I've mentioned in previous videos. I'm going to share with you details about the stock, the fundamentals, the technicals, and at the very end, I'm going to share a good setup for trading options on it. So stay tuned. I think it's going to be well worth your while. Okay, now the first company I want to talk about is AMD. I've talked about them before, but they came out with some really good earnings. Let me actually show you. I'm in Seeking Alpha. If you're curious about Seeking Alpha or bar charts, details will be in the description. I am an affiliate. I will get a little bit of a kickback. I use both these tools day in, day out. I like them both. I've been a premium member with Seeking Alpha for longer. Bar charts I've probably been using closer to 6 to 9 months, but again, I'm using them both. I've really have gotten a lot more used to bar charts now. So of the two, I like them both for different reasons. Um, if you had to pick one over the other, I would probably look at Seeking Alpha just because I believe fundamentals is so key. So here you can see earnings. They had it back on 5/6. They beat normalized actual, and they also beat GAAP earnings. But what's pretty impressive is this 318 million that they beat with revenues. That's pretty significant. Now, if we come over here and we look at earnings estimates, they've changed them and they've actually gone higher. So they're projecting over $4 for this year, next year, 575, 43% increase, then 66.94. And then literally they're going to, by 2028, have doubled the earnings per share, $8.17. Now, one thing I have noticed with them is they typically meet their earnings. If we go back to the earnings summary, we can see here they've either met or beaten earnings for as long as I can remember. So quite impressive. Their next earnings aren't till July 29th. Profitability keeps improving. The numbers keep getting better. Their return on common equity, return on total capital, I'd prefer it to be a little bit higher or higher in general. I do like their cash from operations. They bring in a ton of cash. Momentum is kind of where they're lacking, but I think that's going to change once people begin to realize the potential of AMD and the fact that AMD is going to start competing with NVIDIA. They Next month in June, they're going to be releasing the MI350, which is a chip that will compete with NVIDIA for AI related applications. And I think AI is a long term solution. I use ChatGPT every day, almost all day. I actually have it writing code for me or cleaning up my code when I write it myself. And Microsoft in their last earnings talked about how AI, they're using it to produce a lot of code. A negative that a lot of people aren't thinking about, I do believe that it will impact a lot of programmer jobs. I'm able to do a lot more than I used to be able to do, and I don't need to go to Upwork or even Fiverr to find people to do specific things for me. I will from time to time, but I haven't been back out on Upwork in probably a year and a half. So growth, you can see here, they've got some substantial growth, which for such a big company is really amazing. Valuation, I don't necessarily agree with Seeking Alpha's valuation. What's more important to me is to see, so they're a $166 billion company. They only have 4 billion, about five, almost 5 billion in debt, but they have more than enough cash to pay off all their debt. Um, Dividends, they don't pay dividends. Financials, you can see the numbers are really increasing nicely. And I think these are probably understated again with MI350 coming out and then MI400. And then they have all sorts of other products. They have gaming products. They have, I just recently bought a laptop that I've been really impressed with. And they have embedded technologies that are coming out. So they're going to be growing quite a bit. I wouldn't be surprised if they up their revenue estimates later this year, as well as their earnings estimates. There's a lot of people that are saying that they're kind of the future NVIDIA. They're going to really start competing at the same level. Now, a lot of people don't realize the CEO of NVIDIA and the CEO of AMD are cousins. So, and they have similar styles. They kind of, at least the AMD CEO, I can't think of her name right now, but she usually under promises and over delivers, and she's kind of fairly laid back. At the earnings meetings, if you've listened to them, they're kind of hard to listen to at times. So, and then if you look at their ratings, their quant is a little bit low, but they have good ratings. There's also some good stories talking about what's going to be happening with them. Some people, and I'm included, I think that could be $300-400 stock in a couple of years. I'm still sticking to my belief that by the end of the year they're probably going to be over 125. I could be wrong, but unless something crazy happens with the tariffs and they have some suppliers they can't access what they need, but I don't even think that's going to happen. I believe some deals have been made with the chip makers, and I think they're going to continue to make deals. So AMD, now if we come over here and we look at AMD's, they have amazing option open interest. They also have amazing volume. So you can usually find, it's easy to roll, it's easy to find premium for them. If we come up here to the interactive chart, and this is based on 2 years, so they're kind of right in the middle. If we look at RSI, which is at the bottom, again, the green is above the yellow. It's right now, RI looks like it's right around 42 or 43. So this is kind of pointing to momentum, like a build of momentum. When the green's under yellow, it's usually, and that's what was going on here. It was kind of, I think it's going to trend back up to around 125, right around this area by the end of the year. Now, if they have fantastic earnings, they could shoot way up. I wouldn't be surprised that if their earnings blow it away and they start getting some momentum. You look at Palantir, and Palantir, it has nowhere near this kind of growth, but Palantir has amazing momentum. There's so many people that are kind of, they're on the Palantir bandwagon. If people start getting on the AMD bandwagon, I could see it shoot up. You might have something like what happened over here. One thing I am doing because of that, and we can actually go look at the trade setup, is this is a setup for a put. This is the type of setup I like to do currently because I don't know what's going to happen with the market. So I do believe at their current price, you can write some really good vertical put credit spreads. So here, I like to go around usually 30 to 60 days out, and then I like to manage at 21 days. This is actually with a 17 delta, so it's pretty close to a 15 delta for the short. So I'd be selling the put at 90, and then I'd be buying in 80 at 57 cents. Now you could do a cash secured put and remove the spending the 57 cents, but during these times with the tariffs and the possibility of a recession, I like buying the downward protection. So you can make, I like to make over $1 per contract. So, and I've seen this much higher, and one thing I do tell people is be sure you look at 85 and be sure. I mean, they have $5 increments for their strikes. So it's pretty unlikely if they had dollar um, increments, then if you went to 89 or 88, you might find that an $8 spread is more profitable than a $10 or $9. And I'd end up doing a lot of spreads that are like $7, $8, $9 because of that happening. So, but with them with a $5 increment here, it doesn't really make sense. So we could go back to 80. Um, and you could potentially do, not go out so far. You could go closer to 30 days and you still pick up some pretty good premium, but this is, that's a 13 delta. So I'd probably go a little bit higher. So instead of a 90, I would maybe do a 92. So let's look at 92. And then let's do this as 82. So this is where the example that I was talking about before. So this would bring in 90, 91 to 98. So here I would say, well, let me see what and 83 looks like. So that's a $9. So it's pretty close, 88 to 91. So you're not spending for thinning that spread. But let's try one more. Let's try 84. So it's moving, but not by much. Let's keep going. Let's look at 80. Whoops, went the wrong way. Let's look at 85, which is a $7 spread. So it's in other instances, you'd be surprised how often this kind of a spread would make you more than doing, what is it, an 82 spread. So in this instance, it doesn't. So you could go shorter. You could do a 6-6, which again, if I look at this is 28 days. So the return would be a little bit better. You could potentially close it and do another trade and make some pretty good income. Now, if I was to do this, I'd start with the 96. So I would probably go a dollar or two less. So I might do a 95 or 94 to start with, mainly because AMD has so much open interest and so much volume. I would go with a slightly higher price. So I would start with the ask, and then I would review it and be sure everything looks good, and then I would submit it. Now, the other thing I'm doing currently, because I do own 200 shares, I want to end up owning maybe 400 or 600 shares. So I can change this to a call. And then I think my cost basis is like 115. So we can do the same thing here for a call. So I would do, like, my cost basis is right around, I think, 120. So I could do maybe a 118. And this is 6.6. So I need to go out to 620. And I'm trying to keep this pretty close. So I need to go to 120. And I would look, that's a 16 delta. So I need to go a little lower. So I'd have to do 115. No, wait, no, I'm going the wrong way. I need to do 125. And then we could see that's, I believe, a 19 delta. Um, Actually, I'm doing it backwards. Sorry, guys. Be patient with me. So that's a 16 delta. Then I would have to do 115. So that would be a 24 delta. So I would look at 115. Now, I might even go farther out, again, because I always tell people don't sell covered calls below your cost basis. Try to always do it above your cost basis. And then I would look at doing, again, buying a long call, just like I suggest a long put, mainly because if by the end of the year they're 125, but say they have outrageous earnings third quarter and they shoot up to 150, the biggest issue with covered calls is you might clip your wings, meaning you might miss on some upwards potential. So in this case, by buying the long calls for 73 cents, I'm still making between 127 and 129. So actually the calls are a little bit better, and it's probably because they were up on Friday. But what would happen is if you got closer to this 620 and say the stock it shot up to 140, this call would be worth a lot more. So you might be able to sell it for $2 or $3, or you can just let it, these get assigned away and then these get signed back to you. But a lot of times what happens is you end up making so much on the long call that it becomes really easier to roll, and you could potentially, go back to a covered call, or again, allow the assignment. So it just gives you more choices, just like when you buy the long puts. But the long calls are limiting, what you might miss out on. In this case, you would only miss out on 10. So to keep it simple, if it went up to 140 or 150, they would get assigned away from you at 115. You pick them back up at 125, and you're still owning them at a really good price. And then, but if it got up to 150 and you had the 115, you're potentially missing out on $35 of appreciation versus 25. So just a way of thinking about it. So this is what I like looking at with them. I do believe that they're going to get up to this level and may even go a lot higher. So there's even an argument for not trading call options on them. But again, their call premium is really good. It can be a substantial amount of money. What do you guys think? Let me know what your thoughts are. Would you buy the long call? Is it too pricey? You could also go farther out and say, well, I'll do a 15, and you could do the 130, and then you're bringing in a little bit more income. Now, I also do this with iron condors. I would not do an iron condor necessarily on them, um, but I don't necessarily match up the deltas for the puts and calls. Usually, when I do an iron condor, I like to do it at like 10% delta on both sides. So I'm just thinking, I'm calling this my covered call. What is it? Spread. So my covered call spread. So instead of just doing a covered call, you're doing a covered call spread, again, to limit your missed opportunity on the upside. So again, let me know what you guys think. Would you do something like this? And as always, I share this with my membership. I did a trade like this last week that I shared with my membership, and I had a few people who actually did similar trades and are also thinking along these lines, and we've had discussions about it. If you're curious about my memberships, I'm soon going to be increasing the prices, probably June 1st. I'm also doing away with the free week. I'll have a discounted week, mainly because I've got so much out there. But take a look. It may be worth your time to research it. I don't force people to stay multiple months. You can join a month, leave. The risk you run is if you leave, you'll have to come back at the higher price. It's almost like, you know, YouTube TV. They keep increasing prices. I think when I first had YouTube TV, it was 55, and then 75. Now I believe it's gone up to 85. So just like that, I'll keep increasing the prices. But if you stay with me, I grandfather current members in, and they stay at the current rates. So um, just wanted to mention that. As always, if you have a question or a concern, leave a comment. And thank you for taking the time to watch the video.